Well, hello, all of my friends out there. Welcome to the last Tuesday of the month where we spend a little bit of time together. And my name is Angie, and I'm with Producers XL. And you are listening to The Long Term, where we talk. It's my monthly podcast. And I kind of teased you a little bit last month that I would come up with something ghoulish to talk about the month of October, kind of pertaining to long-term care. And I think I've taken a little bit of a spin on this. I don't think I'm going to do anything ghoulish. Instead, I think I'm going to give you some tricks of the trade and hopefully some treats that you'll enjoy to maybe make the long-term care conversations a little bit easier. And in that vein, so next month, and I'm sure all of you are aware of this, and if you're not, it's because you're neck deep in AEP, which is the Medicare season. So I completely understand, and quite frankly, if we could change the month of November being Long-Term Care Awareness Month, I think we would all love to do that because November is just absolutely crazy. I really think it should be July, right? We're going to talk about your independence, and it just kind of seems to go a little bit more hand in hand with what we talk about. Maintaining independence, your freedom, your dignity. So anyway, that's just my little thought on that. So what I want to bring to you, the treats I want to bring to you, instead of my ghoulish ideas for leading into Long-Term Care Awareness Month. And I don't know if you're aware of this, and I will tell you, the insurance companies have gotten so better at providing consumer-facing content. We've all stepped into the world of social media. I am so excited to tell you that I am looking at 1, 2, 3, 4, 5, 6, 7 different long-term care awareness campaigns. Now, this is all fine and dandy that we have all of this information at our disposal. And I mean, when I say all, it's a lot. It's a lot. And it makes my heart happy to know that there's stuff that we can put out there in front of our consumers. But you know what? Here's what I come to find out. We're not really putting stuff out there in front of our consumers. We're not really bringing up any awareness to them about why they should make a plan for extended care. And I think there's a whole bunch of reasons why. Some of you have been in the long-term care space for a long time. Some of you are having right now lots and lots of conversations about in-force rate increases, and it's painful. I understand that. Some of you, I'm working with second and third generation agency owners, and some of you have no experience with having a long-term care conversation. And quite frankly, for most of us, because I don't work with what I will deem long-term care specialists, right? Nobody out there that I work with is only doing extended care planning. It's just not my agent base. And for those of you that are, love you that you're doing that. But my folks are spending their time selling other products, selling other things, running their agencies that's what puts food on the table. And I respect that. And I understand trying to add long-term care insurance into that mix or giving it some shelf space and definitely giving it a voice. It's a challenge. It's a challenge. So here's my treat for you or for anybody in my listening audience that would want to take advantage of this. And for those of you that are really close in proximity, think long and hard about this. But my treat to you is I want to help develop, and I'm not going to call it a long-term care awareness campaign. I want to help develop with you. And I mean, we're going to become real close friends. We're basically going to start dating because I want to be hand in hand with you, and I want to help you with this plethora of information we have, product agnostic information we have on how to have a conversation, how to slowly drip on your consumers. The thing is, and I've caught so many catchphrases. I love them to pieces. And I think they're relevant, and I hope they resonate with you. But when we think about, okay, well, that's great, Angie, you can help me build a campaign. That's wonderful. But how do we really put it into practice? And that's where I say we're really going to become good friends, because it's a matter of you taking a look at your book of business. And we're not going to try to boil the ocean. We're going to try to really hone in, because you've all heard me say this. None of us are in the business of chasing parked cars. Gets nobody anywhere very fast and ends up giving us a black eye. But what I want to do is really drill into those clients, those customers, even those prospects that you have, and find out who they are. Who are those prospects? One of the things I've gotten from one of my insurance carriers, and sorry for the shuffling of paper because I've got a lot of stuff to share with you, is one of them puts together this entire lengthy calendar, if you will. And the first step is how do we recognize those prospects? In your book of business, how do you recognize who good prospects are? Because again, we're not boiling the ocean. It's going to take you a long, long time to do that. Instead, what we want to do is look for those folks that really would be a prospect for buying this. And I hesitate to say you need to look for your wealthy clients, because I do believe that long-term care insurance does have a fit in your middle market. It truly does. It's just different. And I'll go back to one of my earlier podcasts when I attended the long-term care conference earlier this year. And when I say the statistic of 86% of long-term care sales are being sold as non-premium charging chronic illness riders on a life insurance, that's not the solution I'm talking about. I'm talking about real extended care planning, recognizing those prospects. Are they a candidate for a premium charging rider, whether that be traditional long-term care insurance, whether that be an asset-based? And keep in mind, asset-based doesn't have to be a single premium, right? Some of those are even out on a pay to age 100, pay to age 95. Is it a life insurance that just accelerates the death benefit? But it's either a really good chronic illness rider, or it's a true LTC rider. So how do we recognize those folks in your book of business? What does that look like? Is it a typical prospect? Is it an affluent client that you have? Is it a business owner? And how do we have that conversation? Is it the experience-driven client? Is it the person in your client base that they've just gone through the experience of putting a loved one inside of care, whether that's home care, assisted living, nursing home care, hospice care? Because another thing, right, we all need to recognize the difference between there's things that happen in our life between our health span and our lifespan, and that's morbidity to mortality. And recognizing, just because we have a conversation around extended care planning doesn't mean that we're saying to our clients, someday you're going to end up in a nursing home. Yeah, you won't know anybody, but you're going to be there. That's not at all the conversation we're having. We all know this to be true. Everybody that goes through the long-term care certification training every year, every 3 years, whatever your state deems relevant that you have to do and be compliant with, you're going through this training. Put that training to use. We know the statistics. We know the odds of who's going to need the care. We understand, the length of care, but, don't get caught up in averages. Look, I have so much stuff I want to say. I'm starting to trip over my own tongue here. We all know the statistics, the averages, and all of that stuff, but that is not what sells. Because I will just say this, when you're sitting down with your client to talk about their homeowner needs, or their personal liabilities, if you will, right? That's their car, that's their home, that's their boat, that's their personal umbrellas, all of that. You have to know that client. You have to get to know them to a degree. You have to know what the home value is. You have to know what the car value is. They have to insure these things at some level. So your clients. It's the same thing with an extended care conversation. If you already know this about your clients, then let's just take a little bit more of a look. And I'm not even really done talking about who those prospects are. What if it's the younger prospect? We are starting to see easily 40 and 50-year-old folks witnessing either their grandparents or their own parents starting to age. right? And that's one of the blessings we have in life. If you're lucky, you live a long life. If you're lucky, you're probably going to need care at some level, because there is a difference between morbidity and mortality and how long you live without needing care. So those younger clients, yeah, they do still have things pulling at their wallet. They still have kids in high school. They have kids in college. They have a mortgage. They have those things. But remember, we don't have to fully insure this risk right out. But you also need to stop and think that there are some younger clients that are well off. They do have money. And so there's different ways to position these that just make sense to them. And then, of course, you've got your middle market prospects. And I kind of call that the overlooked market for sure, right? Because we're going to assume that these folks can't afford it. Yeah, it's true. They are going to need to put their plan on a budget. That's okay. You still have some very viable options out there to help middle America put a plan in place so that they don't lose everything when they need a care event. And then if you've got your traveling, I don't want to call it international because I don't want you to think I'm talking about foreign nationals, but those folks that live outside their native country, right? And so maybe having an international component of that contract is very important. So there's plenty of prospects. We can break that all down for you. You guys know this as well as I do, right? There are so many different numbers that are out there, but when you're talking to clients about how do we even start this conversation? If you think about it, I've got some numbers here in front of me, and they may resonate with you and they may not. But I'm seeing a number of 315,000. That's the average lifetime cost of healthcare for a retired couple. And I don't know, it does not, that's a lot of money. And it doesn't take a lot of years to care at that kind of a dollar cost to whittle down somebody's net worth and impact lifestyles, not to mention legacies that they would like. 54%, another statistic or another number, 54%. Only 54% of adults know Medicare will not cover most long-term care costs. That's really just an education. If any of you are in your AEP right now and you're going to listen to this maybe in January or February when you've gotten beyond the 54 days of chaos, we know this. We know this to be true. We know that folks don't understand the difference between Medicare, and by default, they're self-insuring this risk. They're going to self-fund an extended care event if they need to, and they don't understand the difference between Medicare and Medicaid. And there's no reason why you need to sugarcoat Medicaid. My grandmother was on Medicaid. It's designed for a very specific segment. Why do you think the partnership came into, and we ended up amending Medicaid laws? It's for the partnership, right? It's to tighten up those loopholes so that people can't take advantage of the program. You can't give everything away and kind of falsely qualify and let the state and federal government pay for that care. It's designed for those folks that truly do need it. 60%, another number, 60% of older adults have 2 or more chronic health conditions. If you think about the aging process, and we think about the care needs that folks are going to need later in life, we all at some level, even if you've gone through just a rotator cuff surgery, a knee replacement, a hip replacement, most of the time we're in and out of that hospital pretty quick. And then you go through physical therapy. Well, what if all of a sudden you're in the hospital, you go to physical therapy, and then all of a sudden it's just about as good as it's going to get. And that's maybe still the loss of 2 or more activities of daily living. That becomes a long-term care. That's an extended care event. How are these folks? Do they have that conversation before it's too late on how do I pay for this? If you're in the banking industry or the financial services industry, really important that we understand where are they coming to get their money. Well, they're typically going to go to the liquid first, money market accounts, CD accounts. They're going to their checking account. They're going to their savings account. If they're going to go because their biggest asset is their home, and they're going to have to start thinking about, selling the house in a down market. If they're going to go to that IRA or their pension plan or their 401k and start pulling out money for that, what kind of implementations are there on that? All those different things that we talk about, we all know this to be true. I am preaching to the choir right now. I understand that. But if we don't relay this information to our consumers, right? A tree in the woods does not just appear. A seed has to be planted. That's us. We're farmers, folks. We're all farmers. Everybody has to plant that seed so that we can have that conversation before we come uninsurable. And that's the biggest dilemma we have right now. Another number that I'm seeing here, nearly 8 in 10 family caregivers regularly spend their own money to provide care for a loved one. That's true, because it rang true in my family. That was a whole sheet of paper on these. What if we had something like this that sat in front, carrier agnostic, sat in the top of a desk when your folks come in and they're waiting to meet with you about their homeowners, or they're waiting to meet for you about a review of their financial portfolio? What if you had these little brain teasers? What if you had things that just made them have to think about it and then they asked you about it? What if we just made that a normal conversation to talk to clients about that? Something else that was put out by a carrier here recently, and I love these, and I'll tell you the reason. It's called a Vital Records Workbook. And it goes through a little bit more extensively, but I have to tell you, probably one of the greatest gifts you'll ever leave. And I think there's two, and obviously I'm biased here because I'm in this space, right? But two of the greatest gifts you're going to leave for your children is the fact that you've put a plan in place to have your care provided for so as to not burden your children, so they can continue with their lives. They can continue earning and contributing to society. They can still continue their future earnings, not limiting their, Social Security and all those things that play into this. Having an extended care plan in place at some level to help them navigate through this is a blessing. And the other thing is to help them is that you can leave for your loved ones is your wishes. What do you want? Well, this Vital Records Workbook goes through, and this is really important because I experienced this with my own family. And I apologize if I'm babbling because some of this stuff is very close to my heart. But when you can have down, obviously your date of birth, the medications you're taking, what are the major surgeries that you've had? And you may think this is silly. Some of you have lived it. Some of you are probably watching that it could turn into this, and some of you have no idea what this is all about. I will tell you, when you start attending the medical appointments for your mom, this stuff is important, because when you find yourself being skirted off to the emergency room, the doctors and the nurses are looking at you for this information. You're the one that's coherent. You're the one that has to relay this information to the doctors and nurses. Wouldn't it be nice to know that you have this filled out and you're ready to have that conversation, so we have the most up-to-date information? Medicare cards, if they have Medicaid, what's that information? I'm just kind of glancing through here to tell you who they are. Who's the family medical practice? Do they have an internal medicine? Do they have a dentist? Who are the people? Where do they keep their finances? Where's their checking account at? Where's their savings account at? Do they have any charitable giving that they're doing? Do they work full-time? Do they work part-time? Do they have a safety deposit box? Who holds the mortgage? Do they have loans? All this stuff. Then they go into the protection piece of this, which is, the risk mitigation, the risk management of this. And that's the business that we're in. Who's got their life insurance? Who's got the health insurance? Where's their medical? Where's disability? Where's homeowners? All of these things. This is a wonderful resource to give to your clients to say, you're healthy now. You're viable now. I get that, right? You're living your life. You're in your health span. Let's protect that asset base, right? Your health insurability is definitely an asset class. So why don't we write all this down? And if at some point you need to turn that over to your power of attorney, your durable healthcare proxy, somebody that's going to be in charge of that, they've got that information. It is truly a gift to leave to your family. Something else I wanted, we often kind of talk about the 4 myths of long-term care, and them. The 4 myths. Well, one of them put out a thing that said the 4 truths of long-term care, which I think is interesting because I've said in the past, there are people buy long-term care insurance for the same reasons they don't buy long-term care insurance. And I'm going off of just consumer surveys that are taken out there that carriers put together. But, one of the truths is you can stay in your home. I mean, we know when we go to the hospital, first thing people say is, when am I getting dismissed? When can I go home? People want to go home. They want to age at home. Quite frankly, I had an uncle that said, take me home. I want to die at home. I mean, that's where we want to be. That's our comfort level. But one of the 4 lies about that. So if that's a truth, you can stay in your home. One of the lies is I'm never going to need care. Well, that's actually not true. Not many of us can actually escape this world and never need a lick of care as we go through the aging process. Some of us do. Some of us get that blessing, but most of us get sick along the way. The second truth about long-term care is you don't have to be a burden. But what's that lie of long-term care? My kids will take care of me. That's probably my favorite objection. I have a big family, and I have one aunt that's got 3 boys. And my favorite is, Angie, my boys will take care of me. And I lovingly and jokingly said, I grew up with your boys. They're all married with young children. You sure about that? So number 3 truth is your care can be expensive. Another lie is that long-term care insurance is too expensive. And I consider that to be a lie, because if you actually look at the costs, insurance is nothing more than a transfer of a catastrophic risk for pennies on the dollar. That is the basis of any insurance. So if care is expensive, and we know that to be the case, long-term care insurance is just hedging against that very large risk. Long-term care insurance premiums are never more expensive than care received. If you're going to use your policy, it does not take a long time, 6 months typically, that you're on claim, and you're going to reap back what you paid in care, paid for premiums versus what you're going to get in care. It's crazy. I used to look at cost of care surveys and say, it's absolutely insane. There's no way cost of care is going to push up to close to $200,000 a year. There's no way. And I think the current cost of care survey says that's going to happen in about 25, 30 years. Could get there quicker. Guys, we got 10,000 people a day turning age 65. If 52% of Americans are going to need care at some level, doesn't mean they're going to the nursing home. That means 1 in 2. There's that number. 1 in 2 in a married couple is going to need some form of care that they're going to have to pay for. And they just need to have a plan as to how they're going to pay for that. The 4th truth, the time is right now to make a plan, is to make your care strategy. And the lie against that is, well, I'm never going to need it. Well, tomorrow's not a day of the week. Today is the day to set a plan. It's just a matter of having a conversation. But something I tell my insurance companies, look, if you're not calling on me, if you're not physically picking up the phone, don't think just pushing out an email is going to make me give you shelf space to sell your product. If you're not calling me and talking to me and telling me the ins and the outs, the good, the bad, the ugly, tell me everything there is, sell that to me. I can't turn around and make that conversation with you. My customer, my client is the independent insurance agent. If I can't regurgitate that and sell it to you so that you can in turn turn around and sell it, and I don't mean that literally, I mean, right, just have the conversation to your consumer, then the chain is broken. And right now, I think that chain is a little broken. We need to be having more conversations. And so the trick, the treat, the exciting stuff that I'm hoping to share with you is I'm looking for people that want to make a dedicated effort. And I don't care when that is. I prefer you not do it in October, November, or December, right? Because everybody's typically busy at that time of the year, getting everything paid, getting everything sold, putting everything on the books, wrapping up the year end. I get that. So let's look at a long-term care campaign sometime next year. I'm looking for people that want to make that dedicated effort. And I've got a ton of resources at my disposal that are at your disposal. And a little bit of a teaser here is we're looking to put, and you guys, any BGA that you work with, I know they're doing this for you. So we're looking to put on our website everything that's consumer facing that would, in whether it's life insurance, it's annuities, it's disability income, it's long-term care insurance. We want to put consumer facing pieces out there that are evergreen, and they're going to be links so that they're always up to date and current. You don't have to worry about a product, going away, that you'll be able to access. And we can actually view these together, put the piece together, build the calendar to say, okay, on Monday, this goes, Tuesday, this goes, Wednesday, this goes, or let's do let's have a seminar with your clients. Let's do some Zoom meetings with your clients, whatever that looks like, whatever fits yours. But if you're doing social media and you're not throwing content around extended care planning on your social media sites, so at the agent level, right? If you have a company Facebook page, I have Facebook consumer approved material around long-term care insurance. It's ready. It's ready for you to use. All of those things, so we can build a really cool platform for you that works for your clients, works for your schedule, works for your agenda. And I want to be there holding your hand through that whole process, because a lot of you, this isn't your bread and butter, and you're like, yeah, I'd like to do that. I'd like to sell more stuff, but I need somebody to sell it with me. I'm here. I want to help you do that. So there are resources from each and every carrier available to you, and I want to help you with that. I want to, lots of campaigns in a boxes. I guess that's kind of what I'm calling them, is a campaign in a box where we can put all of this together. Couple of other things. So if you're my property and casualty agent and you're listening in, I know we get a lot of times, people are like, yeah, I don't know. I don't know about this. Just keep this in the back of your mind. Our consumers today, the American consumer today, and please throw out the idea that we couldn't get the chips for the vehicles and all that. I understand that. But today we're buying vehicles that are costing $50, $60, $70, $80,000. Well, guess what? We put an insurance policy on that thing. We cover that. We insure that vehicle. And you know what they say happens to the value of that vehicle when you drive it off the lot? Not complete, but a lot of depreciation, which means it goes down in value. Well, what if I told you that we had a way that we could protect all those assets in a vehicle that actually appreciates every year? Folks, that's a long-term care policy, right? That's a long-term care partnership eligible policy with an inflation rider that's going to appreciate year after year after year. So it's a wonderful risk mitigation tool. It's if we're talking about tax deferral and tax efficiency, it's okay to say those things. We've got vehicles that will do that too. Planning tools for that. So what I want to leave with you, have a wonderful November. I will see you again the last Tuesday in November, which will take us outside of Thanksgiving. So I'll probably be gearing up a conversation around something around that. So look forward to that the last Tuesday in November. But what I want to leave with you here the last Tuesday in October is have a fabulous November and a long-term care awareness month. I know that was cheesy, folks, but I told you I was going to do something goofy. I look forward to having all of you listen to this. Love the feedback. If you want to reach me, 800-541-6705. Email is Angie@producersxl, like extralarge.com. Folks, thank you very much. Keep up the good work, and we will talk to you next month. Thank you.